If you're earning more than this, so maybe your rate of pay is more than national living wage, or maybe your number of hours is slightly more than 16, you may still be eligible. Your earnings are any income from employment and self-employment after tax, national insurance and expenses. And those expenses include 50% of your pension contributions. So if you're contributing, I don't know, £50 a week into your pension, then £25 of that can come out of that sort of drop you down from that overall allowance. Okay. Equipment you need to do your job, for example, specialist clothing may apply in certain industries. If you've got to buy your own clothing for work and that's not provided by your employer, then that's counted as an employment expense and will kind of effectively drop your earnings down. And travel costs between workplaces that are not paid for by your employer. So that's not your commuting to work, but the bits in between jobs, such as example, fuel or train fares. And if you're self-employed, those business costs, so you'll complete a self-assessment and the business costs will come out before you declare your final income on the self-assessment. So that might be things like a computer you only use for work, but that would be special rules under sort of self-employment. So again, if you're thinking about increasing your hours or asking for a pay rise, there may be an option there as well to sort of maintain a little bit more income. But one of the key ones, if you're just slightly over, is to pay a bit more into your pension. So in the short term, you might think, oh, I can't afford to do that. But if that means you get carers allowance, then it would almost be silly not to. But also quite often where we're thinking as carers, we're also thinking about the longer term, what's in our pension pots. Any opportunity to boost that is going to benefit us in later life as well, when obviously with the state pension, carers allowance payments will stop. So that could be an extra source of small amount of income for us as well in our pensions pots as well. And a very tax efficient way to give as well. Carers allowance is taxable. So for a lot of people will still sit under that the personal allowance threshold, but it might be relevant, for example, if halfway through the year, your caring situation changes or your work situation changes and you start earning more money, or if like you're claiming carers allowance for half of a financial year, where the other half of the financial year you were working and you were paying tax. So just something where people might think that might not be relevant, but it is relevant in your overall tax situation.